Hello everybody and welcome back. On this channel, I show you how to make free money by investing with leverage. I borrowed over $250,000 from my HELOC, invested it, and share with you all how it's performing. Since my last video, there have been more interest rate increases and 6 months of reinvested dividends. Want to see how my portfolio is held up? Let's get into it. Let's start off with a performance review. I have $280K principal invested, with a market value of $355,000, which is a gain of $75,000, or 26.9%. I'll go over what I hold in a bit, but that portfolio brings in an average of $1,979 per month. With a current interest rate of 6.9%, I'm paying $1,412 per month in interest, which nets me $567 per month. That's right, even with these high interest rates, I'm still making money. And I still have wiggle room for any future interest rate hikes. Now I've had some people ask me, why are you investing with so much risk? And for what? Only $500? And that's a valid question, however short-sighted. Let me show you what I mean. First off, back in 2021 when I was paying 2.65% interest, I was making around $1,200 per month. So whenever rates go back down, I'll automatically make more money. Second, I'm making $567 today, but as more time passes, that will compound larger and larger. And we could see this. In 2022, my compound annual growth rate was 16.28%. Obviously, 1 year's worth of data isn't enough to draw any future predictions. But since it's all we have, let's run with it and assume that rate continues going forward. At the end of 2022, I earned $1,935, but next year, that should grow to $2,250 per month. And the year after that, $2,616 per month. In 5 years, my average monthly dividends should double from $2,000 to $4,000 without adding any new money. And that's because of compounding. Each month, my reinvested dividends slowly increase the amount I receive the following month. But you know what doesn't compound? My HELOC amount. Because the interest needs to be paid each month, my HELOC stays at $245,000 without growing at all. So in 5 years, I should be making $4,100 in dividends while still paying $1,400 in interest per month, assuming my current interest rate is the same. That's a net of $2,700 per month. So while $567 doesn't seem like a lot now, it will compound into something more impressive as the years go on. And just for fun, let's see what I'll be making when I retire. Almost $16,000 per month. And every consecutive year after that, it grows so much more. What if I want to work 5 more years? $34,000 per month. What would I even do with all that money? So yes, it's worth the risk for only $567 now. Let's take a quick look at my holdings. I'm not going to comment on each one, so feel free to pause the video if you want to have a closer look. I have only 2 growth holdings in Amazon and Apple that make up 6% of my portfolio. 53% of my portfolio is in 15 Canadian blue chip dividend growth companies that give me an average yield of 5.3%. And because I like having my dividends be equal or greater than my interest payments, 12 income funds that make up 40% of my portfolio, with an average yield of 11.6%. Well, that's my status update. Is this something you would consider doing? Please comment on any of my holdings in the comment section below, and if you've made it this far and want to see more updates, please consider subscribing. Thank you all very much for watching, and until next time.